Roblox is an interesting business to consider amid the escalating trade war. The metaverse pioneer doesn't sell physical things, so it's not exposed directly to increasing tariffs. That being said, the international basis of its business leaves it vulnerable to retaliatory actions from America's trading partners. So I wanted to evaluate Roblox's business and answer whether or not this stock is a buying opportunity amid these escalating tariffs.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Looking back over the last 5 years, Roblox has demonstrated an excellent ability to generate revenue growth. At 3.6 billion, revenue is more than 4 times where it was in 2020. And that surprised me. I was under the impression that following the economic reopening, Roblox's revenue would face significant pressure. And you can see a little bit of a flat line there when economic reopening got underway in mid 2022. But that's about all. All it did was slow down Roblox's revenue growth for about 6 months, and then the company reaccelerated revenue growth from then to jump to 3.6 billion, which is almost double where the company was during the height of lockdowns during the pandemic. Of course, it thrived during the pandemic because kids were home from school and parents tried to keep kids away from playing with other kids physically, so they let them play with them online, and Roblox benefited as a result. Also, Roblox is primarily free to play, and the company generates most of its revenue from the very small fraction of players that are depositing money on the platform. However, Roblox is increasing its monetization actions by implementing new advertising initiatives to monetize on the other 95% of the users on the platform that are not money depositing players. Roblox's cash flow from operations has recovered and exceeds the levels during the prime time of COVID lockdowns at 822 million in trailing 12-month cash flow from operations. The company's CFO to sales ratio is over 20% and rising, especially given these new advertising initiatives. Once fully implemented, I think the business's cash flow from operations to sales ratio is likely to increase further. The returns on investor capital are significantly negative at 83%, but there's an interesting reason for this. The way Roblox accounts for the company's transactions makes it unprofitable. However, that's just an accounting thing. Let me explain further. When a player deposits $100 on Roblox, that goes into Roblox's bookings. That doesn't count as revenue just yet. Roblox counts that as revenue over a 24-month period. So the way Roblox accounts for the money that's going into the platform is it assumes that when a player deposits $100, it's going to take them 2 years to use that $100. Now, if you have children that play on the Roblox platform and you've given your children money to play on the Roblox platform, you can realize that's a very conservative estimate. It's a very conservative assumption to think that a player who deposits $100 will take 2 years to use up that money. I know when I've deposited $10 or $20 for my kids when they were younger and they were on the Roblox platform, they would go through that money in a day, maybe 2 days at most. And I've talked to other parents and I've heard similar stories. So the business is very conservative in the way it accounts for the deposits going on the platform, and that makes it look unprofitable. That's why I always suggest when you're evaluating Roblox, the more informative metric to look at is cash flow from operations, because that accounts for the cash coming in at the point of reception. So the cash comes in, it gets accounted for as cash coming in. And whether or not the player takes 1 day or 4 days or 1 month to use up that cash, I think is less important because of the assumption of what Roblox does now over the 24-month period is way out of whack. Now, I don't know why management continues to use that. Maybe the generally accepted accounting principles calls for them to use that method and they don't have very much flexibility in how they account for that. But that is what it is. So as an investor, we have to account for that when we're evaluating this business. So now let's look at valuation. Roblox is trading at a price to free cash flow of 52, which is near the lowest it's been going back a year. Still, that's a relatively rich valuation for a business that's not been growing as quickly as of late. Furthermore, the initiatives for advertising have been slow to roll out. Roblox's management team has been talking about these monetization efforts for over 2 years now, and I've yet to see a solid increase in ad revenue on the platform. I would like to see more in terms of ad revenue or other monetization efforts to monetize the other 95% of the free players on the platform, or a lower valuation before I consider Roblox a buy. Now, this is especially more important during the current economic times when consumers are going to feel the pain of these tariffs. They're going to pay higher prices for everyday items like food and groceries and transportation, etc., etc. They're going to have less disposable income to spend on discretionary items like virtual items and virtual spending on games like Roblox. So, all things considered, to update my buy recommendation of Roblox, or I should say buy, hold, or sell recommendation of Roblox, I'm keeping the stock rated as a hold, which is where I've had Roblox stock for over 6 months now. I'm excited to announce a brand new private Discord to our channel members at the VIP Discord tier. It's a great place to directly connect with me, ask questions, and engage with a community of like-minded investors. Spots are limited, so join us today.